Welcome back to another episode here on my channel. Today we're going to be talking about 5 things that all new and beginner investors should think about before entering any money into the stock market. So starting off with our first topic, that is going to be education. All traders, whether new and even experienced, should have some form of education before hopping into the market. Now, things of education could be a course that you take, you could join into Facebook groups, different chat rooms, stay up to date on different YouTube channels. So in regards to my YouTube channel, if you find that my YouTube channel is very valuable and I hand out good information in regards to the stock market or investing or any sort of financial education, then this might be a channel that you would like to subscribe to. So number one important thing overall in any is education when it comes to learning how to trade. Because if you come into the market thinking that you can do it equally as good as me or the guy next to you that has been doing it for multiple years on end, then well, you're probably going to result in losing money. And that's the number one rule out of all, is to not lose money when trading. So first and foremost is to make sure that you yourself find a mentor or some type of chat room, Facebook group that you can get involved with, so that way you can speed up your learning process and your learning curve in regards to trading. Next thing that's most important would be number 2. Before entering the market, you must figure out what type of trader, investor you would like to be. Everybody has a different perspective to the market, and everybody sees the market a little bit differently, and everybody is affected a little bit differently when it comes to trading. So you as yourself need to really dig deep and figure out who you want to be as a trader. Now, there's a different approach you can take to trading. For one, you have day traders. Day traders are going to be traders that are getting in and out of positions on a daily basis in the matter of seconds, minutes to hours. A day trader is as it sounds. They trade for that current day. They never hold positions overnight, and the positions they take are going to at least be closed out before the end of the bell every single day in the market. So a day trader like myself, we go for in and out fast positions to make a lump sum of money so that we can create a daily income, okay? Secondly, you could do swing trading. Swing trading is an approach at which you will enter the stock market. You might buy Facebook, you might buy Apple, it could be Google, Amazon, any one of these stocks. You buy these and you hold these positions for days, weeks, months, and maybe even a year. Up to a year, you're kind of pushing it and getting into more of a long-term position. This is the opposite of day trading. Day trading is in and out in the same day. Swing trading is holding for a couple of days, weeks to months to hopefully make a gain or have the price action of the stock go in your favor. Leading to the last type of investing would be long-term investing, which we all know of by now. You've probably been told it by your parents, a family member. This is the approach that you can have a nice nest egg for your retirement. Long-term investing. So there's a couple approaches you could take to long-term investing, one of which would be having a 401k plan through your job. You could have a Roth IRA through a different financial planner. You could have an individual retirement account that maybe friends and family overlook and take care of the positions for you. Or you could do long-term investing yourself, which would be buying stocks, maybe bonds, different things in that sort of nature. And what you're going to do is you're going to be holding these positions for upwards of a year, 5 years, 10 years, 20 years, maybe even the entirety of your whole life. So that's what it really comes down to, is number 2 is understanding what kind of investor and trader you want to be. If you're someone that's looking for a fast, quick income, you're going to be a day trader or a swing trader. If you're someone who doesn't really want to be on edge and have maybe some of the stress that can be involved with being a day trader or a swing trader, you're somebody that needs to start looking more into the long-term investing side of the business, which means you're going to be holding positions for usually 5 years and longer. I consider anything over 1 year a long-term position. Others will say 2 to 10, 5 to 20. To me, anything that's going to be held for more than 1 year is a long-term position. So if you don't think that 1 year is long, I do. So anything from really 1 year and up is going to be more of a long-term position. All right, so that's what it comes down to, figuring out what kind of investor you want to be. So if you're someone that cannot stand the emotional ride up and down every single day and you want to be in it for the long game, you want to be a long-term investor. If you're someone looking for quicker money, you're going to be a day trader and a swing trader. Note that if you choose to be a day trader or a swing trader versus a long-term investor, there is going to be an extraordinary amount of information and learning curve ahead of you. Being a day trader and being a swing trader is much, much more challenging than being a long-term investor. Being a long-term investor is very easy because all you have to do is take this money, put it here, and forget about it and let it do its thing. Versus a day trader or swing trader, we have to actively be watching the stock every single day, second by second, because those seconds can really determine the amount of income we make or the amount of money we lose. So if you're going to be a day trader and swing trader, just know that the learning curve ahead of you is going to be hard, it's going to be long, and you have to be willing to accept the challenge ahead of you. Long-term investing, not going to be very hard for you, considering all you really need to do is take your money, put it somewhere safely, and let it grow. Going on to number 3. Number 3 is going to be deciding on a broker that will best suit you. These brokers, for example, could be TD Ameritrade, E-Trade, Lightspeed, Robinhood, Interactive Brokers, Ninja Trader, etc., etc. The list goes on. So why is it important to figure out which type of broker you would like? Well, it comes back to the previous question, what type of trader you are going to be. If you're someone who's going to do long-term investing, well then yeah, the broker you pick could be simply as TD Ameritrade, E-Trade, Fidelity, because all you really need is a broker that will be there to execute your trades. But in terms of day trading and swing trading, it's really important to look at the brokers and understand what they're going to do for you. There are many brokers out there to choose from, and some do a better job in terms of executing trades. So think about it like me. I'm a day trader, right? I need to get in and out of a position quickly. So it's not in my best interest to use a brokerage like Robinhood. Robinhood is an application-based trading platform on your phone. And that particular broker does not have lightning fast or relatively even great execution speed. So if I'm someone that is making money based off of small incremental change, I need to make sure my orders are going through at the snap of a finger. But if you're doing long-term investing, you don't need to be getting in at the snap of a finger, you just need to be getting in, okay? So when it comes down to being a day trader and a swing trader, you're gonna have to do some digging around and some research on all the brokers out there to figure out which ones are gonna work best for you. If I may jump in, some of the very best brokers you can have for day trading in terms of very, very, very fast execution are gonna be brokers like IB. IB stands for Interactive Brokers. Another one would be Lightspeed. Lightspeed is another great broker. So those are just two off the top of my head that are going to be really used for getting in and out of positions very quickly. Then you have some other companies like TD Ameritrade and E-Trade that also have fast execution speed, not quite as fast as the ones I'd mentioned prior to, but still fairly good. Now, some of these brokers may have a better charting system where you can plot out your charts and analyze stocks a little bit better than other systems. So again, understanding what trader you want to be and doing the research on a broker that's going to best suit you. And if I might chime in here, for any of you newer beginner traders that are most likely tuning into this video, I would always recommend that before you ever start investing, make sure to do paper trading. Paper trading is ideally using an account with fake money and learning to trade, learning to execute a trade, get in, get out while making some money. So it's very important that if you're a beginner trader just starting out and you're fresh and don't have your feet wet yet, it is extremely important to make sure you paper trade and practice trading with fake money before using real money. It might seem pretty easy, but it's not. There are going to be tons of hoops and different hurdles you're going to have to jump over in order to figure out how to really master this game. And that's why it's important to make sure you at least paper trade, in my opinion, for at least 4 months to a year before ever taking a trade with real money, or at least sizing a big position into the market. And another thing I will mention is if you're a newer trader, I will state this, that you should always use Robinhood first. If you're a trader just getting involved and you want to feel what it's like to buy a stock, sell a stock, make some money, lose a little bit of money, you might as well use something like Robinhood. Robinhood, again, is available through the App Store on your phone, so you can download it to your phone in seconds, sign up for an account within a day, and deposit money by the next day, and you can actually start trading with your real money. The benefit to Robinhood is that it is a free very commission-based brokerage platform. So in regards to TD Ameritrade charges about $7 per transaction. So if I were to buy a stock right now, it would cost $7. And if I wanted to sell that stock right now, it would cost another $7, resulting in $14 spent round trip. Whereas if you use something like Robinhood, you would be spending $0 to buy and sell your stock. So as a beginner standpoint, just starting to learn, just starting to get your feet wet, it wouldn't be a bad idea to use something like Robinhood where you can start executing trades for free just to get the feel for what it's like to have a position, see your money go up and see your money come down. Figuring out which broker is going to best suit you is going to be an important step in your learning process to becoming a trader or an investor. Number 4, figuring out what kind of stocks you would like to trade. If you're going to be a day trader, you might want to start focusing on penny stocks, right? You want to focus on maybe some smaller cap stocks. If you're going to be a long-term investor, it might be wise of you to focus on stocks such as Facebook, Apple, Nvidia, Google, Amazon, Johnson & Johnson, PPG, Pfizer, bigger name companies called blue chip stocks. Blue chip stocks, to put it simply, are going to be your most reliable, reputable, and safe investments, considering these stocks have been around for a long time. They've shown great strength. Downside is very weak. So again, blue chip stocks, long-term investments, you want to look for well-known stocks. We call these staples. Staples are the companies that everybody knows of. Everybody knows Facebook, everybody knows Walmart, everybody knows Caterpillar, everybody knows Coca-Cola. What they don't know is some bogus penny stock name that's never been heard of before. It's not a wise decision to invest money long-term into a stock that has shown no strength or no type of track record. That's why we consider long-term investments, or we consider big blue chip reputable staple stocks for long-term investing, because they have a track record that shows they've been good over X amount of time. So when it comes down to is figuring out what kind of stocks you're going to trade based on what type of investor you're trying to be. Lastly, the most important thing is to have a plan and understand how much money you're willing to lose. So this is the last step here, is how much money you're willing to lose, and to always have a plan. As being a trader and an investor, let's say you have $1,000 in your bank account. Is it the wisest decision to go and put that $1,000 into the stock market? Probably not. Because for one, if you only have $1,000 to your name, what happens if tomorrow your car breaks down and you need some excess cash to go get your motor fixed or to get your brakes fixed or whatever the case may be? But unfortunately for you, you took that $1,000 out of your savings account, put it into a brokerage account, and now your money is currently tied up in investments. Not a wise decision. So importantly, you must always understand how much money you can afford and are willing to lose. And the reason we say willing to lose is not because you're going to lose or because you're supposed to lose, but trading stocks and being in the stock market and in the investment world, losing is a part of the game. It is a nature. It is part of the business. So we don't say how much money you want to make, because everybody wants to make billions, millions, as much money as they can. But what you need to understand is coming into the stock market, it does involve risk. It isn't very easy. There is a challenge. And the most important thing you have to understand is how much money as a person you can afford to lose, because in fact, you might lose the money you invest. It is very possible that you will lose money, and you have to be willing to accept that amount that you can lose. For some, that may be 500. For others, that could be 20,000. It all depends on the individual and the amount of capital that they have or are willing to lose. Having a plan can get very in-depth, but to break it down simply, having a plan means that you're ready to buy a stock. You've been watching it for a while, you know the low points, you know the high points, and you have finally come up with a plan, a spot where you are ready to buy the stock, and a spot that you may be willing or ready to sell if it does ever reach that point in its life. Okay, so having a plan, understanding where you plan to buy a stock, or maybe where you intend on exiting a stock if it's going against you. Learning where to buy and learning where to sell It is a little tricky and it's going to take some time to really get the hang of it and really master it, and that's okay because this is a long journey you're about to embark on. Tune into many of the other videos that I've made throughout my channel. We have gone over instructional videos on how to use TD Ameritrade's platform. I have done numerous videos about Finviz.com, where then you can show you how to scan for different stocks, specifically penny stocks. I have a phenomenal video that teaches any new investor or new beginner trader how to find good penny stocks to potentially trade each and every day. So do make sure, now that you've tuned into this full video, to make sure you go through any of the other videos I have in my channel that may suit you to learning how to trade, technical analysis, and how to identify good stocks to trade. So thank you guys once again for tuning into the video. I hope you like it. Please do give me a thumbs up, a like, a share, and subscribe to our channel, and make sure to hit the notification bell so you can always be alerted of any time we come up with a new video that might help you in this journey of becoming a profitable trader. Take care, guys.